Welcome to the training video of Knowing the Brunei Darussalam Accounting Standards for BDAS 4 Intangible Assets. My name is Fatin from Dynamic Technologies and I will be your vocal guide for today. In this video, I will brief you through the definition of each module under BDAS 4, and by the end of this training, you are expected to understand the background and the different kind of entries that are categorized under BDAS 4. BDAS 4 is subdivided into 4 categories such as BDAS 4.1 Intangible Assets, BDAS 4.2 Amortisation, BDAS 4.3 Research Costs, and lastly BDAS 4.4 Development Costs. Each category will be further defined and explained in the next few slides. BDAS 4.1 Intangible Assets is defined as an identifiable long-term assets of a company having no physical existence. Now let's assume the following scenario. ABC Limited acquired a company called XYZ Limited and the cost of investment is $8 million for XYZ fair value, $10 million for XYZ cost value, and $2 million for goodwill. From this example, we can extract the following accounting entries. Debit will be investment in XYZ with $8 million, and debit the intangible asset which is the goodwill for $2 million, whereas credit will be cash or bank for $10 million. This is a journal entry transaction. Now let's go to the journal entry page in Accounting Plus to draft out these entries. Click on the module Intangible Assets under BDAS 4. A list view of journal entries transactions are displayed. Click the Create button on the top left side of the page and a new journal entry draft is displayed. You may fill in the required fields accordingly as per the given scenario. Further help can be found here on the top left side of the page. Complete draft entry of the journal entry transaction will look like this. You may click Save on the top left side of the page and pause to proceed with the journal entry. Next is BDAS 4.2 Amortisation, which is defined as the process of expensing out intangible assets over their definite useful life. Scenario sample is such that Me Limited patented one of their products at a cost of $100,000. The patent is enforceable for 10 years, so the legal life is 10 years. However, the company expects to produce the patented products for only 5 years and expects to replace it with an advanced version at the end of the 5 years. The company uses straight-line method of amortization. The company is required to amortize the patent over 5 years, which is the shorter of legal life and economic life, and hence per year amortization would be $20,000. The accounting entries are as follows. Debit the amortization expense for $20,000 and credit the accumulated amortization for the same amount. This is an asset transaction. Now let's see how this entry is being drafted out in Accounting Plus. Click on the module Amortization under BDAS 4. A list of past entries on asset will be displayed. Click on Create on the top left side of the page. A new draft asset page is displayed. Fill in the required fields accordingly as this teardrop bubble will guide you on which mandatory fields to enter. Further help can be found here on the top left of the page. A completed draft asset will look like this. Note that the entry is now running. Research cost under BDAS 4.3 is defined as the research cost or the research phase of an internal project is to be written off as an expense as and when incurred. Examples of research costs include activities aimed at obtaining new knowledge, the search for evaluation and selection of applications of research findings or knowledge, the search for alternatives for materials, devices, products, systems, or processes, the formulation, design, evaluation, and selection of possible alternatives for new or improved materials, devices, products, systems, or processes. To record research costs, let's assume the following scenario. ABC Software Company recognized the training on the research cost of their new product XYZ to be $14,000. From this sample, we can extract the following. Debit the research expense for $14,000 and credit the cash or bank with the same amount. This is a vendor bill transaction, where ABC Software Company is the vendor and you are the owner. Now let's try to see how the entries draft out in Accounting Plus. This is how the sample scenario is being drafted out in Accounting Plus. Do note the journal ID for future reference. Moving on to BDAS 4.4 is the development cost. Development costs may be recognized as an intangible asset when all of the following are met. The technical feasibility of completing the asset so that it will be available for use or sale. The intention to complete the asset and use it or sell it. The ability to use or sell the asset. How the asset will generate probable future economic benefit, including demonstrating a market for the asset's output or for the asset itself, or the asset's usefulness. The availability of sufficient technical, financial, and other resources to complete the development and to use or sell the asset, and the ability to reliably measure the expenditure attributable to the asset during its development. Sample scenario is such that ABC Software Company recognized the software design of their new developing product XYZ to be $28,000. Thus, debit will be development costs with $28,000 and credit cash or bank with the same amount. This is a vendor bill transaction. A completed vendor bill transaction of this scenario will look like this in Accounting Plus. Do note the journal ID for future reference. If you need more help, guidance, or a demo on how to get started, we will be more than pleased to assist you. You may contact us with the following details as shown. Thank you for watching the course video for BDAS 4 Intangible Assets.